All right, let's talk about Warren Buffett. We all know him as the Oracle of Omaha, right? A legendary, folksy investor. But what if there's something bigger going on? What if his biggest investments aren't just about predicting the market, but are actually locking into huge geopolitical moves that are planned years and years in advance? Today, we're going to unpack a really wild theory that ties Buffett, the US dollar, and the entire global chessboard together.
Yeah, I know. It sounds like something out of a movie, doesn't it? Is Warren Buffett a time traveler? But the source material we're digging into today asks this exact question. And honestly, when you start looking at the evidence, the other possibility is almost crazier. That he's one of a tiny handful of people who actually knows what the world's economic future looks like 5, maybe even 6 years before it happens.
Think about it like this. Imagine you went out and bought a massive life insurance policy on a perfectly healthy 30-year-old, and you said, I bet they'll pass away on this exact day 5 years from now. People would think you're absolutely insane. But what if you were right? What if you won that bet? That's the kind of impossible foresight we're talking about with some of Buffett's latest moves. It feels less like a stock pick and more like he was just reading the final chapter of the book.
Okay, so to really get what Buffett is doing, we first have to understand the game board itself. And the queen, the most powerful piece on that board, is without a doubt the US dollar. Its total dominance is the key to this whole thing.
So how does the dollar stay on top? Well, a huge piece of that puzzle is something called the Petrodollar system. See, back in the 70s, when the dollar was no longer backed by gold, it got pegged to the next best thing, oil, the world's most vital commodity. If you're a country and you want to buy oil on the global market, you pretty much have to get US dollars first. This creates this constant, massive built-in demand for American currency, and that gives the US a mind-blowing economic advantage.
Now, the source we're looking at highlights this really interesting, pattern throughout history. It's kind of hard to ignore once you see it. Back in the 70s, conflict in the Middle East helps lock in that petrodollar. Then, in the 90s, the euro comes along as a potential challenger, and what happens? The Kosovo War, which weakens it. In the 2000s, U.S. interest rates were low. Money should have been fleeing the country. But conflicts in Afghanistan and Iraq happen, and the dollar actually surges. So, fast forward to the theory's big prediction for 2025. As the U.S. gets ready to cut rates, an intervention in oil-rich Venezuela is forecast to occur. The pattern seems to be, whenever the dollar's dominance is at risk, a major geopolitical event just happens to follow.
And that brings us right back to the Oracle himself. Because in a world that was absolutely screaming about green energy and ESG, Warren Buffett did something that looked completely bonkers to pretty much everyone. He bet billions on old-fashioned, dirty oil.
I mean, the contrast here is just stunning. It's 2020, the whole conversation is about Tesla, solar panels, and how oil is a dead industry. Prices literally went negative for a moment, and what does Buffett do? He's not buying tech stocks, he's pouring billions into Occidental Petroleum, and then he goes and buys a huge stake in Chevron. He was essentially buying that life insurance policy we talked about 5 years early, while the rest of the world thought he'd finally lost his touch.
For years, those investments looked okay, but not great. The critics were out in full force. But then the geopolitical boards started to shift, and suddenly, Buffett's so-called bad bet started to look like an absolute masterstroke. The key was Venezuela.
The theory we're exploring zeroes in on a single year. And when that year comes around, everything is supposed to just click right into place.
Then, the theory goes, the main event happens, a U.S. intervention in Venezuela. And all of a sudden, the pure genius of that bet from way back in 2020 becomes crystal clear. Because look, it wasn't just a random bet on oil. Occidental Petroleum had billions of dollars in assets that were seized by Venezuela years ago. An intervention could mean they get all that value back, like overnight. And Chevron? Oh, they were the only major U.S. oil company still there, with the specific, unique technology needed to get Venezuela's super heavy crude out of the ground. Buffett didn't just buy oil, he bought the two companies perfectly placed for a complete monopoly. But wait, it doesn't stop with oil. According to this analysis, the Venezuela play was just one piece of a much, much bigger global strategy to lock down the physical resources that are going to power the entire next century.
So what was the real threat here? Well, South America, which the U.S. has always kind of seen as its own backyard, was starting to make new friends. Key resources, we're talking oil, copper for electrification, lithium for batteries. They were starting to be traded directly with China and priced in Chinese yuan. That completely bypasses the dollar. For the U.S. economy, that is a 5-alarm fire. This move in Venezuela, the theory suggests, was all about reasserting control.
And this right here is where Buffett's other massive and kind of strange investment suddenly makes perfect sense. He bought huge stakes in Japan's 5 biggest trading houses. Why? Because these aren't just Japanese companies. They are global monsters that control access to raw materials all over the planet, the very same copper, lithium, and iron ore that South America has in spades.
And this quote from the source material just nails it. It crystallizes the whole strategy. While everyone else is obsessed with the sexy, high-tech stuff like AI and EVs, Buffett is quietly going around and buying up the entire supply chain of raw materials you need to build any of it. He's not buying the end product, he's buying the building blocks of the entire future economy.
So, okay, this is a fascinating, maybe even scary geopolitical theory. But what's the actual takeaway for you as an investor? How can you start to apply this kind of oracle thinking to your own money?
Well, it seems to boil down to a pretty simple 3-step process. First, you have to identify the big picture global trend, like the fight for currency dominance. Second, you figure out which physical real-world resources are absolutely critical for that trend. In this case, oil, copper, lithium. And third, you find and invest in the companies that have a chokehold on those resources. It's about thinking way bigger than just next quarter's earnings report.
And here's the end game, the beautiful strategic loop. Step 1, control a huge oil supply like Venezuela's, which helps keep prices down. Step 2, lower oil prices mean lower inflation back home. Step 3, lower inflation gives the Federal Reserve the green light to cut interest rates, making money cheap again. And where does all that cheap money go? It flows directly into funding the next wave of American dominance, high-tech and AI. It's a self-feeding machine.
So, at the end of the day, it all leaves us with a pretty fundamental question. In this massive global game, are you content to just be a spectator on the sidelines, watching things like inflation slowly eat away at your savings? Or are you going to be an investor who actively tries to understand where the big currents of money are flowing and positions yourself accordingly? That choice really is up to you.